closed, we got some very big news from one of our longtime favorites, XPO Logistics. That's that roll-up created by Brad Jacobs to consolidate the trucking industry. It's reviewing strategic alternatives that often lead to a sale, either of the whole company or just the parts. Now, regular viewers know that XPO has been a fabulous long-term performer. It's a terrific play on the rise of e-commerce, maybe the most pure play there is. But in the past year and a half, the stock has struggled. It got crushed in the fourth quarter of 2018, still hasn't fully recovered, even though it's rallied nearly 40% last year. At this point, though, management's gotten impatient. They believe their company's undervalued, so they want to find a buyer for all or even part of the business. I'm excited about where things are going. So let's take a closer look with Brad Jacobs, the chairman and CEO of XPO Logistics, to get a better sense of what he's looking for from this process. Mr. Jacobs, welcome back to Mad Money.
Great to see you, Jim.
All right, Brad, people have made fortunes with your stock. I mean, it's up more than tenfold since your investment in 2011. Why now? And does it necessarily mean that you're done?
No, we're not done. So, first of all, thanks for having me on. So, the stock has performed very well. It was the 7th best performing stock of the Fortune 500 of the last decade, but we're still getting a low multiple. So as a diversified company, the market's only giving us a 8 or 9 times multiple. When you look at what we would get if we sold off or spun the 4 of our business units, each one of those as a smaller pure play would get a higher multiple. So when you do the math, objectively, it creates more value by spinning off or selling those 4 business units. Now, we're not interested in selling LTL. We're not marketing LTL, and we're not marketing the whole company. We're marketing those 4 businesses, North American and Europe, transportation and logistics.
Well, my feeling, though, Brad, is that somebody else has put pen to paper, a large company, and said, hey, Brad, I'll buy your company for, I don't know, it's $7 billion. I'll buy 10, 11 billion. Had you been contacted by someone who's large?
Well, I don't want to comment on those kind of discussions, but what we're doing proactively, I think, is the best way to create a significant amount of value in the stock. Holding auctions and going through a professional process for each one of those 4 business units.
Well, Brad, I got to tell you, I was looking at what FedEx paid for TNT, or overpaid for TNT, if I know you, 5 years ago. They paid 6 times EBITDA for that one really very poorly performing business versus what you have in Europe. Hey, Brad, that means your stock will be worth, well, I mean, just that one division will be worth $14 billion. How do we rationalize what's going on here?
Well, we'll see how the process plays out, and we'll see what kind of market there is, and then we'll see how the numbers shake out.
How is business? Because you are the ultimate last-mile e-commerce play.
Business is good. The industrial economy is still chugging along. It's not been very robust, but I'm sensing a bottom there. I don't see it being booming, but I'm sensing a bottom. It's not getting worse. The consumer part and the retail part is obviously very, very strong. Of course, e-com is growing like gangbusters all across the globe in all of our businesses.
Well, you know, look, I got to, Brad, the division I like is the logistics division, the one that Credit Suisse called in October the Google of logistics. Tech platform is differentiated, scalable. Brad, people don't understand. You spent hundreds of millions of dollars making this the ideal platform that anybody who wants to be in this business would love to have. What do you think that particular business could be worth?
I don't want to speculate what we'll get. You never know on these auction processes, but the leadership positions that we have in each one of these businesses, and particularly there, and the strong position we have in e-commerce, in reverse logistics, in omni-channel logistics, I think there'll be strong demand for it. And we just have to be objective and dispassionate, not be attached, and not have an entrenched management perspective, but have a shareholder value creation focus, which is what we have.
In the meantime, Brad, you should tell people you have been one of the most aggressive buyers of your stock, because it wasn't just that you felt it was undervalued when it was much lower, particularly because someone, I'm going to use the term, raided your stock. It gave you a chance to be able to put your money where your mouth was.
So that's a good example of us being agile, of us being opportunistic, and of us being rational and willing to do bold things that create a lot of shareholder value, even if it's non-conventional. So we did that. You'll recall back in 2015, we saw a company, Conway, which was the big LTL company, and it was very much out of favor. And we saw an opportunity to buy that, and we then did, And we doubled the EBITDA within a couple of years. So create a ton of value. And then with the share buyback, when the shares got dislocated, we bought almost $2 billion of stock back in the 50s. So that's worked out very well too. So now we see the next leg up, the next opportunity to create some significant value is to conduct processes for each one of these four business units. And let's see what kind of prices buyers give us.
Okay, the stock is trading up substantially after the bell, and then instantly people, so I'd mentioned that you're going to be on and said, Jim, come on, Amazon has contacted them, or Amazon's going to buy them. It just makes too much sense. I know you can't talk about any specific company, and you said you can't talk about who contacted you, but you got to give me the opportunity to at least say that Amazon would pay a lot of money to own XPO Logistics.
I don't know about that. You're going to have to ask Jeff Bezos about that.
I might do that. You know that? In the next 48 hours. I think that could actually happen. Why not? Why not? I'll be up there. You bought Europe at the bottom. What's Europe like right now as we get ready for Brexit?
Well, we got to see how Brexit plays out. I mean, I like the fact it's making progress and getting clearer. It's got to come to a resolution. When we talk to our British customers, they're dying to invest in the business and put more CapEx and expansion in, but they're hesitant to do it until Brexit is behind them. There's more clarity on it. When Brexit finally gets resolved, I think the UK is going to really explode in a positive way, but it's not there yet.
Well, you're in a group, frankly, where I've seen in the time since you started, there was the dean of the group, FedEx. And they have been whipsawed every which way, and the situation's kind of devolved into basically a shouting match between analysts and FedEx. How have you been able to avoid what I think has become a very contentious situation between the other companies in the industry and the analysts, where everyone recognizes that your company's worth a lot less, a lot more than those companies are, and not a lot less?
Well, we try to make peace, not war, with our competitors as well. And FedEx, by the way, I think is a fantastic company. I mean, the brand is so strong. And yeah, they've got some little tough times right now, but that happens. That happens to every company. And you work through it and you bounce back afterwards.
Well, it hasn't happened to a lot of your companies, Brad. I mean, you put together this company. A lot of people felt it was too difficult to put together. Everything you put together was additive, and you're still only scratching the surface of a lot of divisions. So it seems to me that you must have avoided some of the pitfalls, some of the markets that didn't work out.
We kept our head down. We tried to tune out the naysayers. And over the last 4 years, without any acquisitions, we grew the business $2 billion on the top line and $500 million on the EBITDA line. So the team has executed very, very well globally.
Well, look, I think you've done a remarkable job in what, frankly, is an incredibly difficult environment. Again, I have to come back to that the company has been up tenfold since your investment in 2011. That's a remarkable figure. Brad Jacobs, Chairman and CEO of XPO Logistics, thank you so much for coming on Mad Money.
Good to see you, Jim. Thank you.
Thank you. Guys, the company's worth a lot more than it's selling for even after hours. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.